All right, please stand for the pledge. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you. We have no requests to speak at open forum, so we'll go straight to our presentation. We have our external audit presentation.
Awesome.
Hi.
And we have Courtney Pearsall, Angels and Associate, who is our external auditor. We worked with Courtney for a number of years. If you remember, she's been here for a number of years. And prior to that, she came with Pat Powers, right? Prior to that. So without further ado, Courtney, I'll turn over this to you.
All right, sounds good. I'm going to give you kind of a high-level overview. I met with Amy and Eben last week, just to do kind of a bit of a deeper dive of things. I'm going to kind of give you a higher-level overview in about 10-15 minutes of all the materials that's important for you as a board member to know. I'm going to start and primarily go over this executive summary. It was probably on top of the big bound book. And that's primarily what I'm going to go over. I'm just going to highlight the materials that are in the packet. I don't have time to go through everything, and you don't want to read everything either, so I'll just give you hit the highlights. So if you open that and look at the top of the first page, one of the letters that we provide to you is a required communication completing the external audit. This letter addresses items such as significant accounting estimates and policies. And as it's detailed out in that first bullet point, because we can't go a year without something new, there was a new accounting standard that was applicable to the district had to implement this year. GASB stands for Governmental Accounting Standards Board, and that is the standard setting body that kind of sets accounting policies across all governmental entities, so that each entity follows it, and it's kind of a consistent approach to how governmental entities report their financial statements. So the standard that had to be implemented had to do with compensated absences. You were always reporting a compensated absence liability on your government-wide financial statements. It's kind of a long-term liability as far as quantifying what you would have to pay out upon retirement or termination of an individual. And the adjustment that has to be made this year is typically how that's measured is it's based on contractual rates outlined in your collective bargaining agreements as far as what dollar amount per day someone would get when they would leave. This asks you to also now quantify time that could possibly, or more likely than not, be used as time off. So in the upcoming year, 2, 3, what their average usage tends to be, and then we're quantifying that based on what their average daily rate is, what they would get paid in salary. I just want to commend the business office. I want to give Bonnie a shout out in payroll, because Bonnie did a lot of data pulling together and was instrumental in the calculation, and a lot of our districts had a hard time implementing this. So I just want to give a shout out there. As far as, there were no difficulties encountered in performing the audit. There are no uncorrected misstatements remaining, meaning there wasn't anything that we didn't find that we didn't ask the district to report. They reported everything we identified, and there was nothing significant or material that we did identify that I have to bring to your attention. And finally, as far as other audit findings or issues, there's nothing that I need to make you aware of. In the letter, it includes the update to a recommendation we had last year regarding BOCES bills. And the district has implemented the control that was recommended and is reviewing BOCES expenses on a monthly basis. So I just wanted to give you that update. Moving on down to the basic financial statements, we provide you with an independent auditor's report on the basic financial statements of the district. It's a clean, unmodified opinion, which is the highest level of opinion the district can receive and which we're accustomed to receiving. And then we also provide you with an independent auditor's report on internal control over financial reporting and on compliance, based on an audit performed in accordance with governmental auditing standards, because you are a governmental entity. There are no instances of non-compliance noted in that letter. That's a clean letter as well. At the top of page 2, We do also provide you with an independent auditor's report on compliance with requirements applicable to major programs, and internal control over compliance that's required by uniform guidance. Uniform guidance is federal guidance that covers all of your federal grants and awards. That is a, what we call part of a separate single audit report. You typically include that in the back of your financial statements, but what I've provided to you tonight is just draft. The reason it's still draft is because the federal government has not finalized the compliance supplement that we use as an audit guide when we're looking at compliance requirements for your major programs. It's draft, it's in draft format. It's usually finalized by now with the government shutdown. I don't know how much longer it's gonna be, but we're not expecting anything to change. We just are required to issue a draft at this point. Just to give you a outline of what's in that report, again, no instances of non-compliance or internal control weaknesses noted. Your total federal award expenditures for the year were $2,034,903. And we had to test 2 federal programs this year. We had to test the last piece of the Education Stabilization Fund money, which was $367,000. It was spent by September 30th, 2024. And then we also had to test the special education grant, the IDEA grant, $332,000 spending in that grant this year. So overall, we tested 34% of your federal awards during the year. As a reminder, we also provide you with a separate little packet on the extra classroom activity fund. We do qualify that opinion from the point of time in which the cash receipts are received by the central treasurer. And then just to give you a sense of your extra classroom activity fund assets for all your extracurricular clubs at the end of June 30th, it was $72,440. A couple highlights with the financial statements on a government-wide basis. If you look down, I do just highlight some of your long-term, non-current liabilities that are just present on your government-wide financial statements. Bullet pointed out there, your bonds, about $14.2 million in bonds, about $2.7 million in debt premiums, which when you issue permanent financing, we defer the premiums over the life of the bond and amortize that annually. And then your compensated absence liability that we discussed, just under $2 million. And then your OPEB liability, which is your other post-employment benefit liability, which you potentially would pay for retiree health insurance. That's a liability that is valued by an actuary that you engage with. That's $7.3 million. And then I just want to highlight and turn to the next page to talk about your general fund. We all know that's the most important to everybody is your general fund and your reserves. So if you turn to page 3, if you look at your balance sheet first, your balance sheet as of June 30, 2025, compared to 24. If you look at your total assets were $18,963,000 compared to just over $17 million at the end of June 30, 24, with your main increases being in your cash line items. In the current year, you had revenues over expenses of about $2.3 million. So that excess essentially is what caused your increase in your cash balances. And you can see the increase in your restricted cash specifically lines up with the increase in your reserves that I'm going to touch on in a minute. And then if you look at your liabilities, total liabilities about $1,905,000 compared to $2,377,000 at the end of the prior year, with the main decrease there being a decrease in accounts payable. At June 30, 2024, there was a BOCI bill that was approved in accounts payable. Not the case this year. And that was offset by accrued interest on the ban that was included in your liabilities at June 30, 2025. And then if you look down at your restricted for reserve numbers, if you go down, you can see all reserves increased year over year. Specifically, I'll highlight your capital reserve. Your capital reserve is at $7.3 million compared to $5,381,000 at the end of the prior year. Amy and Even, I think at this meeting, are going to go through the reserve plan with you in detail, but as you can see, all reserves increased primarily due to the interest that you're earning in the MBT accounts that Amy has so nicely set up for you guys. And then you were able to put, because of the excess revenues over expenses, you were able to fund your capital reserve pretty nicely for the year. Looking down at your undesignated fund balance, you'll see it's $2,792,000, up slightly from the $2,566,000 at the end of the prior year. And that is 8% of next year's budget. Just a reminder, the state has a benchmark that they use or measure. They like to see you in the ballpark of 4% of next year's budget. However, through discussions with the district, your approach is to you're cognitively keeping that at 8%. You're investing excess. You basically have been able to offset the tax levy increase for the past couple of years, and that's what your plan is, I guess, to do with that 8%. If you look to the next page, you'll see at page 4 is your revenues and expenses. And your revenues remain fairly flat year over year, about $31,184,000 compared to $31,245,000 for the prior year. You'll see some increases in your interest use of money on property, which is basically interest earnings. The increases there were offset by decreases in that state source line item. Decreases there were due to decreases in your basic state aid as well as BOCES aid. And then looking at your expenditures increased year over year. It was $28,774,000 for the year compared to $26,932,000 at the end of for the prior year. Increases in the general fund were all budgetary related increases, and then additionally, some of the ARP-ESSER funds that you received were categorized over into the special aid fund. You were able to classify expenses over there last year, where with that funding running out, expenses had to be put back in the general fund and covered by the general fund budget. So overall, if you look down, you can see your revenues over expenses for the year your excess was $2,395,000, and as I mentioned, that was primarily able to be put into the reserves, and that has your cash balances increased as well over year. Are there any questions on it? I want to do that pretty quickly. Any questions on that? One other thing I do want to highlight is in the big bound book on page 10, there is a schedule of fund balances for all your funds. Page 10 at the bottom. It's kind of a long, lengthy table, it looks like. It does. It starts with the general fund at the top, which we already reviewed. If you look down about midway down the page, you'll see your school lunch fund. Your school lunch fund balance ended the year at $468,000, up about $26,000 from the prior year. Your special aid fund remained fairly flat year over year at $114,000. And then your miscellaneous special revenue fund ended the year at $138,000, increase of about $55,000 over the prior year, primarily due to a pod rebate you received from Train that was able to be put into the student support fund, and that's where the student support fund sits in that miscellaneous special revenue fund. Your debt service fund, $351,000, increased $64,000 over prior year, mainly due to interest earnings in those funds, as well as some DASNY access funds were received by the district. And just so you know, that pool of money can be used in the future to be transferred over to the general fund for your annual debt service payments you make on your bonds. And then finally, looking at your capital projects fund, significant activity in this fund this year. You can see it's a deficit fund balance of about $8,574,000. Compared to last year, it was a deficit of $1.77 million. The reason it's in a deficit position is because you have temporary bands that you have borrowed, and you're using those funds for the district-wide capital project. It's about the $10.5 million capital project. So as you continue to spend down on that money, once you permanently finance, which I think is scheduled for June of 2026, when you permanently finance, the bond proceeds will come into the capital fund and will eliminate and remove that deficit. All right. So that's the deal with the capital funds. That summarizes all your funds. Any questions on any of that information? It's nice that in the right-hand column, other than the capital fund, everything, pretty much increased in the capital fund is all good stuff because it's going into your capital improvements and work on buildings and grounds and all that good stuff, so spending is not bad in that area.
The 8% in the general fund over the 4% kind of benchmark, is there concern that the state could, kind of come back on us and say you have to lower that?
Yeah, I mean, there's always the possibility that, if the comptroller were to come in, they were in, I want to say 4 or 5 years ago.
2019, yep.
19, yeah. They came in, and when they come in, they typically will look through all your reserves in general, as well as your unassigned fund balance, to see if any of your reserves are too heavily, what they would consider too heavily funded. They ask for justification for all the reserves. Is there a possibility? Yes, they've never done it in my career. They usually like to see that you have a reserve plan, which you do have a reserve plan in place with the board approving that reserve plan at least annually. And when you have a methodology that you're using in a reserve plan and you haven't increased the tax levy, they like to see that too. So they see that unassigned fund balance above the benchmark, which you're also using that to offset your tax levy. I mean, I don't have any significant concerns. If you had a taxpayer base, I guess I would say, that you would be nervous about making noise at the state and having the state come in, that would be something that I would consider if I were you, but I don't think that's the case. And like I said, if you're not increasing the tax levy, you're not gonna make anyone upset locally enough to go to the state.
Well, I could see if we were increasing taxes and really kind of hoarding into the funds, but I know they gave us during COVID, they didn't have a problem with districts setting aside extra money and going to 6 to 8%. And we just haven't come down, which, leaves us in a strong position.
Mm-hmm.
But at the same time, I don't want to get our hands slapped for, kind of holding too much.
Yeah, I will tell you, you're not an outlier by any means. We audit approximately 40 to 45 school districts, our firm. And I would say a majority of our districts are in the 4 to 6 to 8%. We do have some above 10. We probably have, I would say, at least a handful, if not more, that are above 10, which are more of what I would consider the outlier. So I don't consider you at 8% a significant enough outlier where somebody would come looking. You know what I mean?
Well, that's great.
At this
I mean,
point.
if we can hold more than that, I'd love to. It does give comfort.
It does. It does, as far as uncertainty with the state budget and weathering storms and all that stuff, it gives you flexibility, yeah. I mean, I don't know if I would recommend going up to 10%, but there are positions out there, especially after the influx of the COVID or that stabilization fund money, that it's what kind of increased fund balance for some of our districts.
And the dollar figure that Courtney's talking about, that 2.7 million in the unappropriate fund balance, right? That invested, right? Given if Ms. Warner can predict the rates of return, is about what the district needs to be able to continue or sustain the tax offset account. So that's a rationale for it. And just a little historical context too is OSC was in here August of 2019, and they did look at the reserves. If you remember, they had actually said the tax surcharge was a little bit overfunded because there was no pending claims against it, so they reduced that down. And they also made a recommendation for the reserve plan, which we started the following year of approving it annually. So that was their recommendation out of this finding.
And the extracurricular ding that we always get every year, that seems really, really hard to not get that.
Yeah. I
Yeah,
will
that
tell you,
same
yeah.
opinion every year, because I mean, you are gonna have students involved, and I would say from a school board, I enjoy seeing the students, raising money for their clubs and stuff like that, but you are gonna have that inherent risk of,
Exactly.
yes, are they giving something away, or is there any kind of, I mean, there is a certain amount of lack of control that you almost have to accept as they learn it.
Yeah.
Um, Have you seen other districts that have something better than we have?
No, all of our districts, we have that qualification in the opinion letter, and we have that, I don't want to call it like a ding or a write-up in the letter, but we explain that in the letter. And I think, was it last year or the year before, you kind of modified your corrective action plan?
Yep.
This year, yes. So you basically state, we are willing to accept this inherent risk due to being able to allow the students to have this experience. And I will say, to give Bonnie a shout out, this bothers her too. And I will tell you, she lets us look at everything. And from a central treasurer standpoint, she lets us look at everything that all the clubs do and have, and anything you can be doing, you are doing. We're doing profit and loss reports, when there's fundraisers, there's great documentation coming from the clubs, even concessions. Holy cow, she showed me inventories that are done at concession stands. I mean, she tries to show me everything, and I get it, like, you guys are doing as much as you possibly can.
Right.
So. you
And
feel good about
it's
that.
not a material amount. I mean,
Correct.
to the clubs it is, but
Right.
in the overall budget, it's not.
Correct. And I like how you modified that corrective action plan, basically saying, this is what we do as much as we can, but we understand there's inherent risk that's involved when there's students and multiple advisors involved and all that stuff.
Thank you.
You're welcome.
Any other questions? Great job. Thank you for the great overview once
Thank
again.
you.
Appreciate it.
Thank you.
Thank you, Courtney, appreciate
You're
it.
welcome.
As always, you're welcome to stay, but we know you probably have a trip, so you're also
Are you
welcome
doing a
to.
reserve plan now?
Yes.
Okay,
so
I'll stay for that.
Okay, wonderful.
The whole meeting's exciting.
I would say.
It is.
All right, well, next we have Ms. Warner. Ready?
Yeah, I'm gonna start.
Oh.
Yeah, I'm gonna start
Her
with
face
the
is a little
reserves.
like-
Yeah.
Absolutely can, if you would like me to, ma'am.
I'm gonna-
I'm sorry, even kind of queued you up that you were doing it. so I
She's
was
gonna do,
excited.
yep, Ms. Warner's gonna take over the investment piece.
Oh, okay, all
I'm
right.
gonna start with the reserves, sorry. Get back up here. I'll start with the reserves. So, yeah, again, thank you, Courtney, very much. And two, I have to say with Courtney, she does such a great job is educating us too, right?
Yeah.
When we have questions and we have maybe different strategy ideas, she's always a ear to be able to listen to us and be like, hey, that makes sense, or no, that doesn't make sense, right? So just to appreciate the learning opportunity we have with Courtney. So, as we do, we ground ourselves in our mission and our vision, right? And to really focus on when we're talking about planning for long-term financial stability, right? Is taking a look at, what are we saving for, right? And it's sustainability of our programs, right? For our kids, long-term wise. And that is our primary focus. In addition to supporting the goal areas of student supports and community connections and academic excellence, as we presented back in the August meeting, our focus is on those objectives, long-term wise. Right, just to recap a little bit about New York State Comptroller's reason for reserves. The first one, is saving for projects, acquisitions, allowable things, and again, just examples of our bus reserve and our capital reserve. Again, preserving our buildings and expanding our buildings, and then funding school buses as an example. Reserve funds provide mechanisms for legally saving monies for the district. For an example, when we use a reserve this last year for some ceilings and some lights in unexpected hot water heater failure. Certain reserves, as I just mentioned here, help us be smart with our money. So we're not using general fund money to potentially, like I said, fix some infrastructure or those unexpected type of expenditures. And then there should be a clear purpose or intent for reserve funds that align with statutory authorizations. So for example, Mr. Miller, you're talking about, over the benchmark of 4%, is we're over the 4%, right? with a very clear purpose of investing in a tax offset ICS account to be able to offset a tax levy increase for our community, right? So again, a clear purpose. Just a quick summary, if you will, of the financial reserves. And what you're looking at up here is just a quick snapshot. And these numbers are for when the audit closed out in June 30th, not of current right now. So June 30th of 2025. These are the ICS money market accounts broken up by reserve. The one I do want to point out is a tax offset ICS money account, the third line down where it shows 5.4 million. That is a fluid number, right? That is a snapshot. That is really more, if you take a look at what we can commit into, is the unappropriated fund balance that Courtney had mentioned, that 2.7 million, right? That we keep in there to, because we know that's about how much money we need to be able to generate that $125,000 of interest earned, right, in that tax offset. The rest of them, again, just a snapshot as of June 30th of 2025. And if you like pie charts, right, this is just a different visual, right? This is the same numbers, just broken up into a pie chart. As you can see, the large chunk, again, that is a fluid number, the tax offset. I don't want to say that there's 5.4 million in there, right? Right, that can range anywhere from 2 million to when taxes come in, a little bit more what we're investing, right? And then when state aid comes in, so that number is fluid in that. It's kind of maybe like if your home finances, where money goes into a savings account and then you transfer it over to pay bills and your checking account, and then you transfer it back to the savings. So trying to maximize those investment earnings, if you will. Retirement reserve. This is our ERS and our TRS. You see how it's broken up, and we'll get into each one of those just a little bit. Just the ERS, the 4-year average contribution is $371,260, with a total balance at the end of June with 1.5 million. Our TRS contributions, remember TRS, you can contribute 2% of your payroll, and current balance in this is 761,000. Property loss, just end of year balance, 119,000. Liability reserve, excuse me, with a balance of $722,640. Our tax surcharge, I use that as an example. That was a finding in the comptroller's audit back in 2019, where it was overfunded. And this is funded now at $110,000. Still, there are 3 local businesses that could file right in the future, and that's a good dollar figure to have. Remember, we actually, after a place was sold, we had to reimburse about $70,000 worth of tax money. That's where that comes out of, this tax surcharge. Our EBLAR funds, right, at 1.2 million, this is your employee benefit accrued liability reserve. So for example, if there was, a large number of employees maybe retiring, you could appropriate funds into the general fund, into your budget to offset that, so it doesn't hit your general fund. Like I said, for example, if you had 10 people retiring at the same year, you could appropriate funds in there to be able to do this, so it doesn't hit your general fund. Repair reserve, again, we showed some action on this. If you remember last year, we used a repair reserve for the ceilings and the lights and the hot water heater. And as you'll see in the recommendations for an action item is to replenish that. We didn't have to replenish it because we went through a public vote for it in a public hearing, but there were funds there to be able to replenish that. Unemployment reserve, right, is $236,958. Our capital reserves, and again, we're talking about capital, you see one line, right? That is the capital for capital projects, and then the capital bus reserve, 2 different ones. So what we call it capital 2022, and then capital bus. So as of June 30th, right, the capital project one, the capital 2022, is just over 3.5 million, and then our capital bus is just over 1.9 million. Our debt service, as Courtney had mentioned, is 351,000 as of June. And this can be, we've actually did this last year. We appropriated funds from the debt service to cover. Remember, there was two debt service payments, so we just put some money in there to offset that, to show some activity there if need to be. The unassigned fund balance is what we mentioned there on the right-hand side as of June 30th is just over 2.7 million. That is that 8% that we're using to invest, right, for the tax levy offset account. I see the wrong date at the very top of that. Sorry, June 30th, 2024. That should be June. Oh no, that's right, June 30th, 2024. We're good. Yeah. Never mind. And then we will transition over to our district investment plan. I'll have Mrs. Warner join me for our investment plan. And this is just a good opportunity to pause, right? If you remember a few years ago, we started just by dipping our toes in, doing some investments. And this has really been Mrs. Warner's project to do the last couple of years. Is there was an opportunity to do more with it. And you build a support structure around her to educate herself, and has really built a great partnership with NBT Bank and what we can do with funds. And just to give Ms. Warner a shout out for taking this initiative and really doing some great things for the Sidney Central School District. So Mrs. Warner, I will start off with slide number 1.
So I'm going to present the strategic cash management outcomes, highlighting a multi-year comparison of earnings driven by our ICS and our CD investment strategies. They've resulted in substantial growth in interest income over the past few years. We've been able to successfully leverage our ICS and our CD investment strategies to generate interest income and reducing the financial impact on our taxpayers. So in the 22-23 school year, we started with a limited investment activity. We successfully generated about $67,000. Building on that momentum in 23-24, we strategically placed reserve funds into certificates of deposit that year, and we were able to grow earnings, and we went a little past our $67,000 to about $302,000. And then in 24-25, as those CDs matured, we transitioned the funds into insured cash sweep accounts to capitalize on some favorable interest rates. And a key objective for our 24-25 school year was to invest those general fund dollars into our tax offset ICS account to mitigate and allow a 2% increase in tax levy. Our target was initially to generate $125,000 in interest income to offset that 2% increase. And through active monitoring and some strategic fund movement, we exceeded the goal. We earned $161,560, surpassing our target by $36,000. So for the insured cash, I know we've talked a lot about ICSs in the last couple of years. We don't know if we've ever told you what ICS account is, and shame on us. Basically, it allows us to maximize our interest earnings. So we're maintaining our FDIC insurance coverage, we're safely investing surplus funds, but it also allows us that liquidity and monthly bill payments that Mr. Gold was alluding to. So that money is going back and forth so that we can pay bills, but we can also invest and maximize that revenue as well.
And I pause there for a minute. Mrs. Warner's in the weeds so much where she knows about to the cent of what the monthly warrants are going to be able to slide enough money over there to cover the warrants and then be able to slide them back, right? Not too much, right, but just enough to be able to maximize those earnings. So she's done a really, really great job of tracking the monthly expenses to be able to transfer just enough of that, because interest on day can be a fair amount.
So it's about $500,000 that we were a little more than $500,000 that we were bringing in 24-25, and that kind of reflects the district's commitment to a proactive financial stewardship, strategic planning, and ensuring that we continue to maximize returns while maintaining our FDIC coverage and our collateralization. And I would just go on to say that for our next steps, the reserves and our ICS investments, we're excited to enter our fourth consecutive year of generating interest income to further support our long-term financial planning and reduce our tax burden. We're recommending allocating fund balance to the capital bus reserve and the capital reserve 2022. That is $883 $1,890 for each of those reserves. And then the $2.7 million that we already discussed, investing in our tax offset account. They're going to help offset future transportation costs and contribute to funding our next capital project, and also offset the tax levy increase as well.
And just to point out here, you'll see some movement in capital checking, 162,000. The capital checking is money left over from the last capital project. Any funds not spent has to go back into debt service for the payment of capital project stuff, right? That's the only spot that you can put that. So if you saw the audit amount was 351,000, we're going to put the remaining capital checking into that. So it's just over $500,000 into the debt service, which again can be used to offset future projects, tax levy increases or tax increases for that, or to pay it, or to pay down debt, right? You have options for that.
So having those additional funds in the budget gives us some flexibility as we move forward. And the goal, again, I think we've talked about this a lot, placing that money in those insured cash sweeps is to help generate the additional revenue through the interest earnings to offset that tax increase for our residents. That is my top goal at this point. I mean, that's important to me. Coming from the background that I came from in finding money, that's a fun game, navigating, but that's an important thing for you to do, is to be able to find new money, because new money is not easy to find. So are there any questions?
Good job.
Well, this is awesome.
Yeah.
I have one about the rates coming down, but the fund balance is going up. Do you have a projected number that is your goal this year?
I would like to, certainly, I think 127 was my 2% moving forward. I've had a lot of conversations about interest rates. As a matter of fact, I was at the Prestar fall budget presentation today, and NBT was there too, and we had some interesting conversations. NBT, the ICS accounts are not dropping as quickly as rates are. They're kind of holding them a little steady. Right now, they're projecting moderate losses monthly. So what we did was we projected out over the next 2 years to see what would be more beneficial for us if we're looking at ICS accounts or we're looking at T-bills or CDs, and there's a point where we can balance that, and that's what we're going to be looking at moving forward.
Great, thanks.
But if you could sustain 4.5%, I'd much appreciate it.
Yeah, I know, right? If there's not another rate drop before the end of the year, that'd be great.
Yeah.
Can you go back a few slides, please?
Yeah, sure.
Which one? So right there.
Yep.
So the, no, one more.
Sorry.
There you go. Maximize interest earnings, what this is in talking about the ICS accounts?
Mhm.
Okay. Can you explain that a little bit? How these ICS accounts are going to maximize interest earnings?
Because right now, their interest is higher than a long-term CD or a T-bill. Currently, they're at about 3.95% per month. And if I'm looking at anything that's out like 6 months to a year, they're lower than that because they anticipate rates coming down, so they're not giving decent rates that we can buy into for a 24-month period of time.
And we were looking at strategies too, and that's a good question, Corbin. We're looking at strategies too about, some of the funds we may not need tomorrow, right? The capital reserve, right, or the bus reserve.
Right.
Do we look at, 24-month CD, or do we look at something that could be returned more on, right? Depend on where rates are. Right now, I mean, it wasn't significant to get into that. Yeah. That's a good question though, man.
And the FDIC is 250,000, right? So do we break into multiple accounts, or do
We
they give more
do,
for?
so the initial amount is covered by MBT, and then it breaks out into banks across the United States. So we're fully collateralized. All of the money that we're investing is fully collateralized.
Okay. I was gonna
That's
say-
what's special about
We think we're going to show the stock market?
Well, no, I was just gonna say, she kept saying it's fully FDIC insured, and I'm like, that's only 250,000. So I was like, how many accounts do we have to break it into to maintain that coverage?
Yeah, and I'm sure MBT purchased like extended coverage. I know, like that's something that we do too, so.
We get, you give us the statements and like the list.
They're full,
Yeah.
they're
Two
full
pages, like 2 pages of things that like are all over the place. I don't know how MBC keeps track of it. They can give you the dollar amount, that's like.
Yeah.
Yeah. But the favorable interest rate environment right now has allowed you to do so much. And you guys are restricted as to what you can invest your money in, and this is pretty much it.
Yeah.
So should the interest rate environment go down, you're not gonna see these great earnings every year. But the way you be able to build stuff up, even with the interest rate dropping, with your, increased reserves, you can still make a decent amount of earnings.
This is like a money market. It is a money market.
Yeah, essentially, yeah. It's just a higher rate, and there's no lockup time period. Sometimes money markets, like you said, have like a 6-month, 12-month. This allows her to sweep back and forth as she needs to pay bills, which is
And I'm saying
very convenient.
part of that was a comfort level on our part, right, to have it be, have some liquidity there, right, is back and forth. We just weren't sure, right, and, we're kind of learning as we were going, and I had peace of mind, I guess, right, where it wasn't locked up, so.
Interest rates fall, you have to go to 12%, 10 or 12%. We'll have to push the envelope to keep it.
We'll talk about that strategy. Right, and any other questions? Thank you very much, Ms. Warren, I appreciate it. Any other questions?
Any other questions?
Awesome. And you'll see those recommendations in the action items for the transfer from the general fund to the appropriate reserves, and then to approve the reserve and investment plan.
Thank you.
Yeah.
Thank you both. All right, moving on, we have our superintendent report.
Yeah, I just want to pause and recognize our Board of Education and thank you for board recognition week and month for what you do for the City Central School District, right? Because your guidance and your support and your leadership, right, is what allows us what I think to be great. So I just thank you very much for your support. Thank you very much for your leadership. Thank you very much for allowing us, I'm going to use it, right, to fall forward and to be vulnerable with each other, to try different things, right? Not every idea works. But knowing that you have that level of support behind you to make mistakes, right? And to grow from those mistakes is such a peace of mind. So I just appreciate the support and allowing us to, be a great school district and a great community. So just thank you very much for that. So just a couple things is Michelle Lyons here with the STA. It has a card and a gift certificate for you. Then there's a nice binder with some city swag in that as well too. And then if you didn't get a fleece, make sure you grab a fleece before you go anywhere out, right? And I know you always wear it proud, right? So I see some city swag already.
Well, thank you very much.
Yes, thank you.
And thank you to the STA.
Yeah, so thanks. Just a general update. We had an awesome conference day on Friday. Is one of the superintendent conference days, and just kind of summarize up a couple things is UPK 12 teachers learned about the New York State Portrait of a Graduate. We talked a lot about that. Mrs. Johnston led over 100 people right in here. It was a very busy place. Just on what that looks like, right? And sort of kind of understand those competencies that we've talked about. Grades 3 through 7 teachers participated in a Eureka Math Squared math initiative. They did some great work with from BT BOCES as well too. Instructional support staff was led by Mr. Stenta. They participated in some trainings focused on supporting students and some safety protocols. Buildings and grounds teams did some team building activities. And then transportation completed their 2-hour refresher training, CPR certification, and pre-service training. So it was a fun-filled day on Friday, and there was really good energy there. A couple other things, elementary-wise, I know I said this in the update, but I just want to let you know that the UPK 6 students helped the city police department name their new K9. The winner was Chase with 122 votes. Chase is on the case. I would imagine maybe this came from Paw Patrol. If you have kids, you know that was probably a popular one. But I just appreciate that partnership with the city PD to think about the City Central School District and Mr. Wood. Mr. Hansen to be able to lead that. They ran it very similar to like how we voted on a new logo and mascot. So it was a nice partnership. And then another quick thing is all students in the UPK2 were provided with a pumpkin activities, thanks to the donation of Price Chopper for over 200 pumpkins for UPK1. So in the Covered Bridge Farm, giving each student a pumpkin for their field trip to learn about the farm was an extension of the September reading program too. So just good shout outs to both Covered Bridge Farms and to Price Chopper for their dedication and donation to the Sidney Central School District. Next up, the junior senior high school, they're going to be holding a leadership conference on October 24th. This will be for students in currently in club officer positions and student athletes in leadership positions. And they will be participating with Stuart Gordon, who is a company from Appointed to Lead. Cooper had the opportunity to participate with Appointed to Lead with the ex officio regional board student training this summer. And so we're excited to have them back. It is some leadership training, so we'll see how this goes. We're shooting for about 30 kids to participate in the full day leadership conference.
That's here.
That's your hit. Yep. In the annual FFA fair will be held this Friday. There's 24 different displays. The students will demonstrate their passion, whether it be from animals to hunting to dirt bikes, right? Their passion for the outdoors and their passion for all things FFA, if you will. That'll be housed right here on campus. We're excited for that. The youth basketball registration information was sent out. This is for students in grades first through sixth. Season will begin mid-November. Sign-ups as student community ID. So we're excited to kick that off about a month earlier than what it was, about 3.5 weeks or so. We got some feedback from parents says, hey, any way to start that a little bit earlier than last year? It was in December, so we were able to put some processes into place and be able to do that. So, and then thank Courtney for the successful audit and her guidance and her leadership. And thank you for Ms. Warner for the investment plan that she's really embraced with this stuff. So yeah.
Great. Any questions? Okay, thank you very much. Right. Resolved upon the recommendation of the superintendent of schools to approve the minutes of the regular Board of Education meeting held on September 9th, 2025.
So moved.
Second.
All those in favor?
Aye.
Opposed? Carried. Resolved upon the recommendation of the superintendent of schools to approve the personnel consent agenda as presented.
So moved.
Second.
All those in favor?
Aye.
Opposed? Carried. Resolved upon the recommendation of the superintendent of schools to approve the consent agenda as presented.
So moved.
Second.
All those in favor?
Aye.
Opposed? Carried. Resolved upon the recommendation of the superintendent of schools to approve an overnight trip to Penn, New York for the 2025 Teen Institute Conference, November 20th through 23rd, 2025.
So moved.
Second.
Discussion.
No, just excited. I'm sorry, just excited to send kids back to this. Yeah, again, awesome conference. We have 4 or 5 students going back as staff members for that, and then sending 10 students for their first time participation in the leadership conference. So just want to thank Mr. Yurka, and he's got a couple of chaperones, a middle school counselor, Mrs. Tanner, and I can't remember the third chaperone, Ms. Prelitz, thank you very much. And Ms. Prelitz, I thought someone I wasn't 100% sure. Ms. Prelitz for, being the chaperones over the weekend for that. It's a great opportunity for kids.
All those in favor?
Aye.
Opposed? Carried. Resolved upon the recommendation of the superintendent of schools to seek to sell school district property which is of no use for school district purposes and which is located at 15598 State Highway 8, Town of Masonville, County of Delaware, and State of New York, being tax map number 183.3-2-3, consisting of approximately 7.5 acres, and the building located thereon, and being known as the former Masonville Elementary School buildings and grounds as presented.
So moved.
Second.
Discussion.
Were you already looking for bids for this?
That'll go up tomorrow. So have to deem it not usable or that we don't need it and then approve the next one, the RFP, before we can send it out.
I saw it, but it must have just been in an email, not.
Yep, not really good. So it'll go to the Daily Star tomorrow.
Any other discussion? All those in favor? Opposed? Carried. Resolved upon the recommendation of the superintendent of schools to approve the request for proposal, RFP, for the sale of property as presented. The Sidney Central School District is requesting submissions of proposals for entities and/or individuals to purchase the former Masonville Elementary School building and grounds within the town of Masonville, Delaware County, New York.
So moved.
Second.
Discussion. All those in favor?
Aye.
Opposed? Carried. Resolved upon the recommendation of the superintendent of schools that the board authorizes the transfer of $883,890 of unappropriated general fund balance to the capital reserves for buses.
So moved.
Second.
Discussion. All those in favor?
Aye.
Aye.
Opposed? Carried. Resolved upon the recommendation of the superintendent of schools that the board authorizes the transfer of $883,890 of unappropriated general fund balance to the capital reserve 2022.
So moved.
Second.
Discussion. All those in favor?
Aye.
Opposed? Carried. Resolved upon the recommendation of the superintendent of schools that the board authorizes the transfer of $125,000 of unappropriated general fund balance to the repair reserve.
So moved.
Second.
Discussion. All those in favor?
Aye.
Opposed? Carried. Resolved upon the recommendation of the superintendent of schools to approve the financial reserve and investment plan as presented for the 2025-2026 school year.
So moved.
Second.
Discussion. All those in favor?
Aye.
Opposed? Carried. Resolved upon the recommendation of the superintendent of schools to approve the extracurricular fund corrective action plan as presented.
So moved.
Second.
Discussion. All those in favor?
Aye.
Opposed? Carried. Resolved upon the recommendation of the superintendent of schools to approve a merger with Unit Eagle Central School District for varsity bowling.
So moved.
Second.
Discussion. All those in favor?
Aye.
Opposed? Carried. And board member comments.
Thank you again for all the gifts.
Thank you. Very
Great.
kind.
You're welcome. Thank you. Justin's not here. He's our new alumni rep. However, I do know that they just put something out for, yes, we're doing this together for Career Day. So if there's anyone interested, I know Terry Shunk is taking, there's a list of careers that they're looking for, but they'll take pretty much anybody if you want to come. It's November 25th. It's November 25th. So just let Justin know, or Terry, if you want to participate. Anybody else? Cooper, do you have anything? Okay. Motion to adjourn.
So moved.
Second.
All those in favor?
Aye.
Opposed? Carried. Thank you, and we'll see you next month. Thanks again.